Everyone knows that the most important part of the home buying process is house hunting. Finding the right house to best suit your wants and needs is, in reality, only part of the process. One major and often overlooked part of the home buying process is the selection of the best mortgage program for you. Just as there are a wide range of styles and layouts designed to appeal to your wants and needs, there are also numerous loan products available here at Open Mortgage best suited for your situation. Let's take a look at some of the programs that Open Mortgage offers. The most popular loan program is the conventional loan. Conventional loans are not guaranteed or insured by the federal government, which sets them apart from other programs like FHA, VA, and USDA. We will touch on those in a bit, but first, let's get back to the conventional program. Conventional interest rates may be fixed or adjustable and can be used for a purchase or a refinance. These loans require a minimum 5% down payment. A common myth associated with the conventional loan is that a 20% down payment is required, and that is simply not true. Though the conventional loan requires a slightly higher down payment, borrowers can save money through various mortgage insurance options. While many government-insured loans carry mortgage insurance for the life of the loan, conventional loans drop the required mortgage insurance after 20% equity is reached in the home. This is where the 20% down payment myth comes into play. If you were so inclined and had the money saved, you could pay 20% down and never have to pay mortgage insurance. In short, conventional loans may cost a little more in the beginning, but in the long run, they can save you thousands of dollars compared to other loan programs. Additionally, the seller of your home is allowed to assist in closing costs up to a certain amount. The FHA loan has continued to rise in popularity amongst homebuyers in the last few decades. As mentioned earlier, these loans are insured by the federal government, which allows lenders to offer low, secure interest rates to eligible borrowers. If you have issues with credit or no credit, the FHA loan may be your best choice. FHA loans require a 3.5% down payment compared to the 5% requirement with conventional loans, which will save you thousands of dollars up front. Unlike the conventional loan, FHA loans carry mortgage insurance for the life of the loan. It never drops off. Additionally, FHA loans allow a higher amount of closing cost assistance from the seller than conventional loans. So, when comparing the two most popular mortgages, the conventional and the FHA, you can see that, generally speaking, the FHA is better suited for those needing to save money up front to afford a house, while the conventional is better suited for those trying to save a greater amount of money over 15 to 30 years. Another option that you have with both the conventional and the FHA are what we call rehab loans. These loans allow you to roll in the cost of a remodel or upgrade into your purchase or refinance. This can open doors to new possibilities in houses that just need a little extra work to make them your dream home. The FHA rehab loan option is called the 203K, and the conventional rehab loan is called the Homestyle loan. For more information over rehab loans, please check out our video library. Another option is the USDA loan. The USDA loan is available for properties that fall within guidelines deemed rural areas by the Department of Agriculture. Do not be misled by the term rural. A home that qualifies for a USDA loan is not necessarily in the middle of nowhere surrounded by green pastures and grazing horses, although homes like these certainly may fall into this domain. Entire towns and cities fall into USDA-eligible regions across the nation. USDA loans require zero down payment and also allows the seller to assist with closing costs. So it's possible, depending on the seller, for you to close on your home without paying more than the cost of the appraisal, making these loans very desirable. One of the key factors in USDA eligibility, besides where the property is located, is income. In the case of the USDA loan, there are income limits that may prevent you from qualifying. Income limits differ from county to county, so it may be possible for you to make too much to qualify. If you are a member of the military, a veteran, a reservist, or a National Guard member, you may be eligible for a VA loan. VA loans, like the USDA loan, allows for zero down payment. It also does not require private mortgage insurance. Generally speaking, if you qualify for a VA loan, then you should use the VA loan. To qualify for a VA loan, you will need to provide a certificate of eligibility. If you have a custom-built dream home in mind, we offer the one-time close loan. This allows you to purchase the land, plus the cost of constructing a home from the ground up. This also applies to modular and manufactured homes. Open Mortgage is well versed in a number of down payment assistance programs like the TSAC program, SETH, and the Texas Heroes program. If you wish to know more about which loan program best suits you or your family, please contact your nearest open mortgage loan originator.